Hello, today is the 27th of July, 2011. Welcome to today's silver analysis. But before we get on to silver, let's talk about the cotton market. We'll move that into gold and we'll finish it off within silver. Cotton, US cotton number 2, don't know what number 2 means. And the price in whatever unit it happens to be measured in is 103.67. And it's been down for quite a bit over the last few months, as it was not able to hold here at this 18 average. And not a big surprise that it fell through when you take a look at what happened before it got there, because it found support in this candle here, managed to come back up to this level, was unable to break this part here, found another test, managed to go up again, another chance to get higher. It didn't do it. Back to the support level. The more often you test support, then the more likely it is that it'll be taken out. And this was the case in here. Okay, I lost my screen on the right, or the levels on the right hand side. If you need to know what any of the numbers are, then they're available on the earlier part. This chart will not be on the blog, but the embedded video will be available. Now, as far as the market being down too much, well, whether this is down too much, that's always up for debate. It is now within this lower band, which is designed to state when markets get oversold or overbought within the higher level. It's not uncommon for it to come to this level and then keep hugging this level, as I like to call it. So far, it's been 3 months, or 3 weeks, excuse me, that it's managed to hit the lower part of this area. Now, as Fibonacci is concerned, this breakout in 2008 was $40 from the breakout. Therefore, the Fibonacci is 75. From the high of around 219 and the low of 40, that represents 75. I think before, if we were to go to 75, it would have some sort of rally. Whether it would end up coming up as little to this Fibonacci mark here or this moving average, this higher Fibonacci mark, or even 61.8% from this high to this low, that's possibilities. But if we do go to 75, and that's if we do, I think the likelihood is that we do have a bounce before it goes lower. A lot of people within this move are getting hit on margin calls, and it's not that big of a popular commodity. But when you go from over 200 to under 100, that's a loss of over 50%. So it just seems pretty obvious that many people have been getting hit within the margin calls on the way down. Now, as far as playing this on a physical, tangible level, again, I don't know. But this time I'm kind of interested because I like to buy when markets are down too much. And that's what I'm seeing right now in cotton. And if I was stating, well, if we're going to 75, why would you think it's down too much? Well, if I'm looking to get 2 orders in, one here, and if it comes down here again, there would be a second one. And the only way I personally would play was in a physical, tangible level. Again, I don't know how long this stuff lasts for. I know it's a plant. And I'm not going to be going to the dollar store and buying many bags of cotton balls. But if I was able to buy it at this price, confident enough I can go up here, then there's a gain of about 20%. And then on the long-term level, if you're looking to get out of fiat cash for real tangible assets, then this is much cheaper. Again, I have no idea how to buy tangible cotton. Let's now move on to gold. We're looking now at the same 1 week chart, each candle representing the Monday to Friday sessions with the 18-period average again. And it's in a nice little uptrend. It has never confirmed a break below the 18-period average of lows, and the only time it's been there for a small gap in here, and that's it. And every single time that it breaks out of this level, it has a very good chance of having a nice pattern of higher highs and higher lows, or at least just going up a decent amount. From this breakout point here, roughly at 1420, it goes up close to 1600. That's a decent sized move. So here we are now breaking out at around 1560, 1570. After finding support at this 18-period average, where we go right now, well, that can be anyone's guess. Now, as far as this candle in here, this doesn't seem a little bit right. I just put this in very quickly. I may not have got the highs for today right, but what is correct is it's bull market. It has sold off just a little bit today. but not too much. I'd be looking for a move up to this higher band, but we might come back first and find support at this previous level of resistance, roughly at around 1570, which might be needed. It doesn't have to happen though, so that's why I should just say that instead too, I guess. I don't know. Switching this over to the weekly silver chart, and it's currently trying to break out from this 18 period average, which was showing a market sideways consolidation for a little over 2 months. It still hasn't obviously broken through it, but these are the types of signs that I like to look for to give me reasons that the market is going to continue again within an uptrend. The bands in here are reducing, thus this one's also going higher. This tells us that the volatility is lower, but then that's to be expected after you have a big fall like this, and when you're trying to consolidate, and you do, then that generally would bring in the lower movements within the volatility. What's important is to obviously hold this 18 average. It can very easily go back in below it and keep the trend still intact. We'll see that more now within the quarterly or the quarter day chart. And within this chart, what we have is now over 5 days of the test within the 5-day moving average. It started here. This was back on the 19th of July, and it has yet to complete the test. It's either going to pass or it's going to fail. It can't do anything else. A pass is it going higher, and a fail is going lower. But every single time that it has went either above or below this moving average, it has recaptured its level. At first, it went below it. It went below it in here, back within the trend, tries to break over, and here's a spot where you have a situation where you break above it, and now you're just ready to get going. Break this resistance and move higher. Well, it's broken the resistance, it just hasn't moved higher. And when you have this support level, here's where the market's really supposed to break out. And instead of having that happen, it's managed to come back within this 5-day moving average, and it's still showing signs of being cautiously bullish, trying to find the direction again to the upside. But it seems to me that if we don't have that test of the 42 level that seems as a guarantee, then that's going to be one very heck of a fast move. And we can see it better on the daily chart. And the methodology within this is we came up to this 38.2% Fibonacci level, and if we can confirm a break above, then that should mean a test towards the next one. And we have enough candles like we do, that's enough for confirmation that a test of the 61.8% at $42.09 or in or around that area to be tested. It still can do so. In fact, if you take a quick look at this, we still got this trend line that is connecting. This wedge pattern did break down or break up towards the upside, still holding above the 18 period average of highs, lows, and close. The last time it broke out from there was in here, and it's managed to at least continue on within some of the gains. I'm still looking for it to move up towards this level, but I also do realize that if it doesn't do so, and we break not only below this level here, but even break below in here, then that could cause a significant fast move towards the downside. I'll be looking for the Fibonacci from this high towards this low if, of course, this does come into play. And by expanding on towards this daily chart, going back over the last year or so, at least since the breakout of this level in here, we're now looking for, or I'm looking for, a confirmation break above the 50-day moving average. Now, I've been stating that anytime you go below a significant moving average and it doesn't reverse the trend, then that's a failed move. It also seems that the bigger the failure, then the bigger the fast move. There was a big failure back in here confirming we were going parabolic. Well, that failed, and this was a fast move. This would be a big failure as well. A failure by having this take place. It looks to me like it's a baseball stadium in Minnesota or Toronto, or a dome for that matter. And we've just broken away outside of this area. This 50-day moving average, it's not front weighted, it's a regular one. But it is now starting to move towards the upside. Therefore, what I'm looking for is this market to continue the momentum towards the upside. What would be more beneficial, not beneficial, more ideal to make it easier for confirmation, is for this market to either continue to correct sideways for the next 6-7 weeks. I don't think so. Or come back down towards this average, then start to lift higher, and then break out. There's your confirmation as well for this moving average to now be starting to looking pretty good. And some people might even state it's confirmed now because you've had a break above this, the sideways consolidation, and it's still hanging in there, holding 40, holding 39, and holding that 38 level. That's extremely important. And I'm going to finish this off again with a quarter-day line chart, more candles, and go back over this trend line that I've been talking about for a while now, and it's still holding in there with previous resistance being used as support. But here's the thing. The more often support or resistance is tested, the more likely that it will be taken out. Therefore, I'd be looking if it does break down for maybe a potential test down towards this level. And if it, again, like I say, if something can happen for this to get going, to break higher, then there could be enough fuel to spark this pretty nicely. I can see now what would be an ascending triangle, which is this upward trend line with the just a horizontal straight line that connects as many of these peaks as we can. Something like this. And the break of this trend line can create a lot of volatility. The volatility lately, it has been going lower, as we can see in here, starting to go back up with the selling, but really not too much. And this chart is over the quarter day. I want to use this mainly to show signs for when things are looking to go pretty wild. And if it can find a way for this average to get above it and then break free, I'd be looking again for those significant moves. But you know what? I'm going to end this video because I think this has been one of my worst videos ever. But I'm still going to upload it because I think there's still a lot of good information out there. And I don't think everybody thinks that it was my worst. I think there's a bunch of people that are still going to like this video, even though I don't. Thank you for watching this, and have yourself a great day. Bye-bye.